All right, welcome to the Explainer. So the crypto market is in a really interesting spot right now. You could even say it's a little nerve-wracking. We've got high prices, sure, but the anxiety is just as high. Today, we're going to cut right through all that noise. We've been digging through what some of the sharpest analysts are saying to give you a clear, no-nonsense picture of what's really going on. Okay, let's get into it.
So this is it, right? This is the one question that's on every single investor's mind. After this massive run-up, we're hitting some serious turbulence. Is this just a healthy little pullback? A chance to catch our breath before the next big push higher? Or are we starting to see the first cracks of a much deeper, much more painful collapse?
To figure that out, we're going to break this down into four key parts. First, we'll look at the Bitcoin anchor. Then, we'll dive into Ethereum's critical test. After that, we'll explore what some are calling the altcoin awakening. And finally, we'll wrap up with a sort of compass to help you navigate all this chaos.
Okay, let's start with the king, Bitcoin. Whatever it does pretty much sets the tone for the entire market, so figuring out what's happening here is absolutely our first step.
So, after this really powerful surge, Bitcoin tried to break out, but it got knocked back down. But here's the interesting part. Instead of crashing, the price has just been grinding sideways in this really tight range. What we're seeing is a classic consolidation, basically a tug-of-war between the bulls and the bears, and it's creating a ton of uncertainty about where we go from here.
So in a situation like this, you have to know which price levels actually matter, and analysts have mapped out this battlefield pretty clearly. Think of about $119,700 as the ceiling. That's the level the bulls have got to smash through. The middle of the fight, the pivot point, is right around $118,200. But the real line in the sand, the one you really got to watch, is the support down near $116,700. If that level breaks, it's a huge signal that this isn't just a pause, it's the start of a much bigger correction.
And while Bitcoin is kind of stuck in the mud here, a really major trend is unfolding. Its dominance, its slice of the total crypto market pie, is actually shrinking. Now, this doesn't mean money is leaving crypto. No, it means it's rotating. Capital is flowing out of Bitcoin, and it's starting to look for new homes, which takes us right to our next section.
And that brings us to what feels like the main event right now, Ethereum. While Bitcoin is just chopping around, Ethereum has had this sharp pullback that has a lot of analysts worried. It's raising some serious questions about the health of this entire bull run.
For anyone who follows technicals, this number is a big, flashing red flag. Think of these Fibonacci levels as, well, like safety nets during an uptrend. In a really strong market, you expect pullbacks to be shallow, to bounce off that first safety net at the 0.382 level. But Ethereum, it's sliced right through it. It's now heading toward the 0.5 level, which is a much, much deeper correction than the bulls ever wanted to see. And that suggests there might be some real weakness under the surface. So this has created a fascinating split, right? You've got conflicting signals everywhere. On the one hand, the bears are saying, look, the pullback is deep and the price was already losing steam. But then the bulls clap back with, hold on, this whole dip happened on super low volume, nobody's panic selling. Plus, it's still holding above that massive $4,000 support level. So, is the trend just tired, or is this a giant bear trap?
With all this uncertainty, one analyst, Biquan Darren, offers a really critical piece of advice. He's warning everyone not to bet on a sudden, sharp, V-shaped recovery straight back to the highs. He calls that a low-probability event within a low-probability event. Basically, he's saying, look, if a recovery does come, it's probably going to be a slow, ugly grind, not a clean sprint.
So where's the line in the sand? It's amazing, actually. Multiple analysts are all laser-focused on the exact same price zone, right around $4,630 to $4,650. This is where the bulls have to make their stand. If they can push through and reclaim this area, it's a huge sign that they're back in control. But if the price gets up there and gets rejected, that would confirm the bears are taking over. This is the one zone to watch. Now, as Bitcoin and Ethereum are busy duking it out, that capital rotation we talked about earlier, it is really starting to heat up. And more analysts are pointing to the altcoin market as the place where the real action is about to happen.
And here is the rocket fuel for that potential fire. This chart shows the supply of stablecoins, basically digital dollars, in the crypto world. It's just blown past $280 billion, and it grew by 2% in just the last week. That is fresh capital, new money, pouring into the system, just sitting on the sidelines, waiting to get deployed into the next big thing.
So where might that money go? Well, analyst Yufu Liabi gives us a pretty good snapshot. He's looking at Solana, and he thinks its sideways action isn't a top, it's a setup for the next move up. For PayPay, he is extremely bullish, calling its consolidation a launch pad and saying he's 99.9% sure it's not a top. He's a bit more cautious on OP because of some resistance ahead, but still sees some nice upside. And then for a coin that's been really beaten down like Blur, he sees a potential bottom and a speculative buy for a possible 2 or 3x gain.
And really, his overarching advice just sums up the whole altcoin sentiment perfectly right now. He's saying, in this phase of the market, when the big guys are just chopping around, patience is everything if you're an altcoin holder. The strategy is simple: hold your spot positions, tune out all the daily noise, and just wait for that market rotation to lift everything up.
Okay, for our final section, let's zoom way out. It's so easy to get lost in the day-to-day charts and all the noise, so we're going to look at a really powerful tool that helps long-term investors find their bearings and just navigate this chaos with a much clearer head.
That tool is called NUPL. It stands for Net Unrealized Profit/Loss. Now, it sounds complicated, I know, but as analyst Fengi explains, the idea behind it is actually incredibly simple. It's an indicator from the data firm Glassnode that just looks at all the coins on the blockchain and figures out if their owners are in profit or at a loss. The end result is basically a mood ring for the entire market.
And the best part is, using it is dead simple because it's color-coded. When the NUPL line enters the red zone, that's capitulation, maximum pain and panic in the market. Historically, an amazing time to buy. As it moves into orange, that's the hope phase, a good time to accumulate. When it gets to green, that's belief. The market is very profitable, and it's a signal to be cautious and stop buying. And finally, blue is pure euphoria, extreme greed, and a very strong signal that a market top is getting close. So let's tie all of this together with a few key takeaways. First, try using macro tools like NUPL to focus on the big picture and just ignore the daily drama. Second, understand that the big theme right now is capital rotating out of Bitcoin and into Ethereum and altcoins. Third, and our analysts really stress this, patience is your best friend right now. Avoid those emotional trades. And finally, know your key levels before the market moves.
And that leaves us with one last question for you to think about. In a market that's this chaotic, this noisy, with so many conflicting signals, what's the actual winning strategy? Is it to dive deep and analyze every little wiggle on the chart? Or is the real power move to just zoom out, trust your long-term plan, and ignore almost all of it? Something to chew on. Thanks for joining us on The Explainer.